for us, we're in a pretty privileged position because, I mean, our focus for our private bank is Asia, Africa and the Middle East. In and for, that's what we want to do. We're not focused on Europe, for example. What we have as an advantage to a lot of banks in the world is we've been in India and China since 1858. So we have a very big base right across Asia, especially. We've been here a long time. We have those relationships with the wholesale bank clients. We have those relationships with SMEs already. So basically what we're doing is tapping our existing client base.
I want to take a look at your assets under management, AUM. 2/3 of the $42 billion of the assets you manage are Asian money. We saw 31% growth globally last year, 39% growth in Asia. What are you projecting for 2011, 2012?
Okay, well, certainly we never give forecasts out for growth, but we expect to grow rapidly as the market grows, and it's certainly a very exciting time for us here.
You highlighted India. You have your eye glued on India. Who will drive growth? Which industries?
Well, for us it's pretty wide-ranging. I think one of the interesting things for us is that 64% of high net worth individuals are business owners. And because we have a huge business base in places like India and places like Indonesia, tapping into that growth is really important to us. And more importantly is understanding their businesses, understanding the risks within their businesses. Because actually if you give advice in private banking that has the same risk correlations as their business, actually you're not diversifying them.
You also highlighted Indonesia, but there's been a setback there because of the recent incident involving Citigroup, where one of its local employees allegedly took money from customers. There's been a ban on banks from growing its wealth business. What are your thoughts on that?
I won't comment particularly on that case, but I think one thing we're finding across the industry is increased regulation. So there's no doubt that that regulators are I suppose, trying to rebuild trust with the public after the financial crisis. I think the industry itself has a long way to go to actually rebuild that confidence. So I think from our perspective, we operate very much on the FSA principles because our lead regulator is the FSA, and also the local regulations. So in some regards for us, actually lifting the bar is good for us because that's where we are anyway. So, but I think there's no escaping that regulators will get tougher with private banks and the wealth industry as a whole.
Shayne, with your expansion plans comes the need to hire more. You're targeting 750 people by 2013. How is that impacting costs, given that there's greater poaching happening within the industry and you have to offer bigger paychecks to your employees?
We are getting cost escalation right across the board. There's no doubt about that. And that's basically because there's huge wealth creation in Asia. There's not enough private bankers within the industry. So therefore, it's really ratcheting up the cost base. I think one of the advantages that we have is that, one, we can leverage our platform that's already here. So we've got the wholesale bank, we've got the consumer bank. So we have that platform in place when it comes to infrastructure. So we pull product from wholesale bank, we use infrastructure from the consumer bank, for example, branches, ATMs, etc., etc. So from a cost perspective, actually, we're in a pretty good position.